Great show for you today, featuring the team from DefiDollar, Sid Jain and Arpit Agarwal, as well as Santiago Santos from Parafi Capital. Hi, Santiago. Hi, Sid. How are you doing?
Hey, Lou. It's great to be here. Thank you for having us.
Cool. So the episode today, we're going to be focused obviously on DefiDollar. Santiago is a well-known VC in crypto and has actually made an investment in DefiDollar. So Santiago is going to share with us some of his thoughts on the stablecoin ecosystem and some of his thoughts behind the investment in DefiDollar. But we're going to start with Sid and Arpit from DefiDollar, who are going to be sharing with us kind of what's been going on at DefiDollar. And there are a number of new things on the horizon or happening right now. And so with that, as Arpit, Sid, why don't you bring us up to date on what's going on with DefiDollar? And let me know if you guys want to grab the screen and share anything, just let me know.
I think I'll kick it off, right? Arpit can then take over. So I think, Lou, thanks a lot for having us. It's been not a very long time since we were last on the show. But yeah, I think in terms of progress, we've come a long, long way, right? Back then, I think when we were on the show, we had just launched. I think it's been 2.5 months or more, right? Close to 3 months since we launched using the Curve SUSD pool. Since then, there have been a lot of changes, a lot of iterations that we have made to the protocol after factoring in feedback from our early power users and the community in general. DefiDollar is much more robust in terms of its architecture, and also we've slowly climbed up the TVL locked in the protocol as well, right? Currently, I think we're just shy of $6 million in volume for DefiDollar. So I think it's decent progress for a protocol that's just 3 months old. And yeah,
hey, Sid, can you share your video?
Sure, I can do that. Yeah. It says you can't start your video because the host has stopped it. I just tried switching it on.
Okay, hold on just a moment. Okay, can you put it on now?
It still says the same thing. Okay, I think now it's fine.
Okay, perfect. There you go. Hey.
Okay. Yeah. Let me know, and I'll. Yeah. So yeah, I think it's been a great deal of progress since then, right? And we're entering a new phase of the protocol's journey in terms of a big step forward towards the DAO, the DefiDollar DAO, right? And issuing the token and having a let's say widespread distribution and incentivizing users for the long term in order to stay with the protocol is something that we're working on currently. And I think it's just very difficult, although a lot of protocols have tried many different ways of going ahead with the initial liquidity or initial token distribution. But there are always things that you can improve, and you can't just have like a perfect distribution. But me and Arpit have put a lot of thought into how we're planning to do the token distribution for DefiDollar, which is DFT. I'll probably take a pause here, right, and probably let Arpit share some of his thoughts, and then we can move over to Santiago.
Why don't you start, Sid, just talking about DefiDollar and the kind of what differentiates DefiDollars from the other stablecoins out there.
Okay. Arpit, do you want to take that, or I can continue?
Yeah, go ahead.
Sure. So Santiago, Lou, first of all, I think, so DefiDollar is a stablecoin index. It's it comprises, or its foundation is basically different stable coins, right? So in essence, uh, the better an index is judged is on basis of what it contains, right? What it comprises of. That's basically the foundation of that index, and that's where DeFi dollar is different from all of the other stable coins, because it kind of brings together all of the advantages of holding different stable coins, in the sense you're not exposed to a particular style of stable coins, let's say crypto backed or fiat backed or even algorithmic. Our whole thought process here is to make sure that we're agile enough and our infrastructure is supporting any of these stablecoins that keep on coming, right? And I think we mentioned this last time around as well. The just the threshold to issue new stable coins, right? The barriers have come down significantly, right? And we foresee, even in the near to medium term future, right, that issuing more and more stable coins is going to be the norm, whether it's corporations or probably just other vanilla stable coins coming out of like different exchanges. It's going to be pretty huge, right? We're just scratching the surface in terms of the addressable market cap of the stablecoin market, right? So that's where DeFi dollar differs. We're trying to create a index which can capture this aggregation opportunity, right? While I mentioned the aggregation opportunity, but the major thing that we're trying to address, or the USP of DeFi dollar, is to hedge the risk, right? That comes from, let's say, holding a particular stable coin, and then in terms of an adverse scenario, right, when the value falls down due to volatility or some inherent risk in the protocol itself, right? So that's what we're catering for, and that's what makes us different, right? And the beauty of building it on top of the top DeFi protocols currently is that we can generate some yield, right, underlying from these underlying protocols, and then use that to bootstrap adoption and kind of incentivize the LPs of DeFi dollar, right? That's something that differentiates us from some of the other stable coins out there.
And how do you, what's the stabilizing mechanism?
I'll let Arpit take this one, right? He loves this bit.
Right. So basically, the thing with the other stable coins is, right, the coins like DAI or SUSD, is that they are debt obligations in the system, which means that only the people who have minted it can burn them, right? DeFi dollar is different because it gives you an arbitrage mechanism. That's
hey,
what
Arpit, can you put on your video?
Okay. Is that okay?
Yeah.
Yep. So the thing with DeFi dollar is that it has an efficient arbitrage mechanism, right? And what I mean by that is you mint DeFi dollar with other stable coins. You put in USDC or some other coin, and then that works. That's how you mint it. Now, to answer your question, right, how is it stable? So let's say DUSD is trading above the peg in the open markets. So what I'll do is, because I can generate a new DeFi dollar with $1, I'll put $1 in the protocol, generate a DeFi dollar, and then sell it in the market. So there's this arbitrage. Similarly, if it's trading below the peg, I'll buy it from the open markets and then redeem it with the protocol. So that's the arbitrage mechanism. This is effectively what keeps it stable, right? But this is also like the most basic mechanism, while also the most frequent. But there are two more things that we are planning, right? So what happens when there's a shortfall in the protocol? Let's say a partial shortfall. DeFi dollar is trading at 0.95 cents. What happens then? So we are planning a safety module, and we are calling it stability module. It's very similar to the Aave safety module, and people will be able to stake their DFT governance token in that safety module, and that acts as a backstop for the protocol. So if the protocol is under collateralized, then the staking participants will be liquidated if they don't maintain their collateralization ratio. And we are also working on a very new kind of a liquidation mechanism where it's more democratized. There would be no auctions and stuff, right? And because they're taking this risk, they'll get inflation or emission, DFT token emission rewards, very similar to Synthetix. And at the last is, let's say, because DefiDollar is a index of stablecoins. Let's say there's a scenario in the future when it is backed by 10 stablecoins, right? Voted on with governance token, the DFT governance token and the community. What happens if one of the coin fails? Right? And if that made for like 10% or 5% of the entire portfolio of the USD, at that point, safety module will like obviously kick in. But if that is not enough, then new DFD will be minted, very similar to Maker, right? And that those will be auctioned off. And the incentives here are aligned because DFD holders are the ones who are voting for what coins to add to the protocol. And they are also bearing the cost for it, either actively through the safety module or passively through just by holding the DFT token. So these are like the three guardrails that work, keep it stable and also kind of to give you that sense of an insurance layer that sits behind this stablecoin.
Cool. Can you guys talk about what you've learned? So now that you guys have been live and out there, and you're a top 20 stablecoin now, so congratulations on that. But what have you learned? What's been different than you thought it would be, and how have you adjusted to that?
Right. So actually, we just reached top 15 stablecoins day before yesterday, and we had aimed for that for October. So very happy with that. The thing that we learned is people just care about yield and nothing else. At least that's in the at least that's in the short term, right? So now the thing is, there's all this talk about Bitcoin, crypto, Bitcoin hedges against inflation. You are your own bank and stuff, but you would never really see the value of Bitcoin unless you live in a country like Venezuela or Argentina, right? Where there's inflation is really high, or dollar fails or euro fails. Bitcoin is there for a reason, but you wouldn't actually see its value unless these things happen. I think similar is the case with stablecoins, right? We are building this insurance layer that protects you against Tether failing or some other stablecoins failing. But if Tether never fails, then DefiDollar doesn't do a lot. So then the idea of insurance, the idea of hedging your risk among stablecoins just becomes notional. And even though that has a lot of value, but it can be hard to understand for a normie user. So I think that is a challenge that we are facing, right? There is something good that is good in the market, but how do you convince users that if the domino effect was to kick in, if one domino falls, a big smart contract risk or Tether goes to zero, something like that, how do you protect other layers in the DeFi from falling as well? So my idea there is you put an insurance layer behind every domino so that every insurance layer dampens the effect of dominoes falling. But of course, all of that is theoretical, right? You might not actually ever see it happening in practice. This is something that I have mixed feelings about this, right? I don't want a particular stablecoin to fail because then DeFi is really affected. But if stablecoins never fail, then you don't really see the value proposition of DefiDollar. So I think this is something which is a bit hard to convince. But yeah.
And so you've got how much now is circulating in DeFi dollars?
5.5 million.
5.5 million. And do you have a sense for the geography or any other information on who's holding the DeFi dollars and what they're doing with them?
Not really. No, we don't.
I think it's difficult to track users by geography, right? But I think we can fairly say that they're very much distributed just by the conversations that we're having from people on the Discord, right? I think we can use that as a proxy. Although some of them are anonymous, right? Most of the people don't really disclose their identities, but we've had conversations from people from Americas or Europe and even Asia Pacific, right? Like people from all of these regions are present in the community and they keep on interacting and asking us questions. So it's pretty distributed at the moment. And it's even as we speak, right? I think the TVL gap has gone to 5.9 right now. So I think by the end of the show, we might even cross 6. Right.
All right. Very exciting. Can you turn on your camera, please, Sid? And I'm sorry for whatever reason, Zoom is only allowing one camera on at a time. So I have to switch you guys as the hosts. But do you have a sense of at least how many wallets are holding DeFi dollars? So you got a sense of what the average holding is?
There are 255 wallets, but average holding is something that I'll need to look into.
Okay. And any other lessons learned during the period that you've been live you could share?
I think yeah, sorry.
I'll just take it, right? I'll keep it crisp. The only thing is that we didn't want to over-engineer, right? And that sort of belief got reinforced because a lot of changes that we made to the protocol since launching, I think that would have come even faster had we launched it quicker and then taken the community's feedback. That being said, it's very important for any new protocol that's going out there to ensure a minimal level of functionality, right? And then try to get that initial feedback from your power users or your community, and then try to iterate. Because a lot of teams that we know are just pushing their product releases just in order to have like the perfect solution on day zero. That's a myth. It doesn't really exist, right? Even the best teams out there, Synthetix or Aave, I think they've had major changes to the protocol. And that's something I think if we had known earlier, we would have moved a little bit fast. Yeah.
Interesting. So terrific. You guys are going to hang out, and we'll have more questions from me and from the audience. But it would be great now to hear from Santiago. And Santiago, I will make you the host, and so you can turn your camera on now, and we can hear you. But it'd be great to hear your thoughts on the stablecoin ecosystem and your investment in Thesis and DefiDollar.
Yeah, let me know when you can see my video.
So we can see you now.
Okay, great. Yeah, so for context, at Parafi Capital, all we really do is invest in DeFi protocols, and we are users first and foremost, and that really informs our thesis in the space. Obviously, stablecoin adoption has really taken an interesting sort of evolution this year. You have roughly now close to 20 billion of stablecoins in circulation. There are, as you said, Lou, over 20 flavors of stablecoins. I think this time around last year, you had less than 1 billion in circulation. And so it's been quite interesting for us. We think that stablecoins are in that catalyst, that email moment in crypto and DeFi. Why? Because it just creates a stability layer by which you can do all these different components of DeFi, lending, borrowing, collateral. And so Maker obviously was one of the first instantiations of that, aside from Tether. And as part of our thinking is how do we express that view, and where will value be kind of created by stablecoins? Certainly it pushes the ecosystem forward. And so our thesis was there will be a number of different stablecoins, whether it be all denominated in US dollars or different currencies. Some are fully kind of collateralized, fiat backed like USDC. Others are kind of seniorage models or knocked back by collateral, and all different flavors in between. And then you have another spectrum of decentralization. Obviously something like Tether or USDC is very much centralized, and something like DAI started off being pure and decentralized, and now it's backed by a number of assets. So it's sort of a hybrid. And so the thesis for DefiDollar for us is, I remember having is one of a really exciting deal. I mean, we invest across all kind of stages. We like to back the sort of the best entrepreneurs, and in this case, I think I read the Medium post that day. I reached out to them on Discord, was one of the first ones that joined. And then I was on a call with Arpit and Sid. I think it was less than 12 hours after that. And then committed on the spot to lead the seed round. And so, I think it was this idea that if you're going to have many stable coins, then you ought to have a layer on top of that creates a basket of these stable coins and protects you from any individual one of these stable coins from collapsing or deviating from the peg. Now you layer on top of that the interesting component, which is it is a stable coin that automatically also acts as a savings account because you're capturing yield across some of these opportunities. And so that, I think, expresses a very interesting paradigm of just not holding what you're used to thinking of cash, and then you have to deposit it and then do some productive activity with it to capture some yield and fight inflation. In this case, it's doing everything bundled up together. So it provides, just in summary, more security because it's composed of a basket of different stablecoins and also captures yield. So it acts as a sort of a high yield savings account all in one.
It's very interesting. Can you back up just a little bit and talk about, so if all you do is DeFi, how, kind of what your thesis is in DeFi and how it's evolved over time?
Yeah, well, I guess I could take that a million ways, but it feels like this time around last year, no one was kind of talking about DeFi, and it feels now where DeFi spring has come, off its highs. People are, kind of dismissing of DeFi, and there was a time where a lot of people this summer, all they were talking about was DeFi, and so. But I guess to zoom out, our thesis is quite simple, which is finance hasn't really been modernized for the last 20, 25 years. There's a reason for that, right? It hasn't really caught up with the internet. You can't really move money and transact and move value the same way that you move information through bits, right? You need to always have a central party. The internet never kind of solved that. And so, collectively, I think everyone here in this phone call can agree that DeFi, like finance in and of itself, hasn't really kept up with the internet. You don't have this Amazon-like experience. Now through decentralization, you're able to do some really interesting things. So for us, really, my partner Ben and I have been investing in crypto since 2012, where we come from finance backgrounds. So obviously, I'll give you an example. Anytime you can have like perfectly auditable collateral 24/7, 365, right? Because you're able to see it on the blockchain, then that's really exciting. You tell any banker that you can do that. When I was at JP Morgan, you tell any banker at JP Morgan you ever do that, their eyes will glow. They'll start rambling about a million different things that their life would be easier, but also different products that they can compose. And that's DeFi, really. We don't think that DeFi is going to blow up traditional finance or Wall Street. Like these two worlds will exist. But there was a lot of opportunity, right? You had, over the last 2 years, you've had protocols like Maker and Compound and Uniswap and Aave really kind of led the foundation for really the backbone of this parallel decentralized finance ecosystem that is highly composable, it's highly integrated, and will allow for not only replicating things in traditional finance at work, like all the money verbs like lending, borrowing, insurance, but also new primitives, right? Because everything is highly composable and integrated, and so something like a flash loan is super capital efficient and it just doesn't exist in traditional finance, right? So anyways, just to back up a little bit, like we see a lot of opportunity in DeFi. It's a bit of a head scratcher for us that DeFi has the most amount of product market fit, most amount of builders, teams, like human capital looking and in the space relative to sort of the broader crypto ecosystem. Traction in earnings and growth, and yet it still is less than 4% of the entire market cap. And so that really for us is that under that just premise, if I were to like crystallize our thesis, is something's got to give, right? Because when you see these protocols get adoption, it's still very early. There's a lot of experiments going on. We think that there is an incredible amount of opportunity in DeFi.
And do you see, are there particular areas, be it, the loans or, obviously you're excited about stable coins, insurance, other areas of DeFi that you're particularly excited about these days?
Yeah, I think perhaps one area that continues to be very unexplored is insurance. We were one of the earliest investors of Nexus Mutual. But I think historically, if you look at industries, you really need to have robust insurance to for an industry to really take off, right? And so we certainly know the risks in interacting with DeFi. You have like smart contract risk, you have hacking, like, you know, the risk of losing your funds, of losing your private key or compromising your private key, or a whole number of other risks. And you really don't have a robust insurance solution right now. Nexus insures 1% of all total value locked in DeFi. So that really kind of paints a picture for a lot of opportunity in insurance. So that's perhaps one area that continues to be really underserved. Like if you look at the whaling industry, right, you needed to have insurance for it to really take off, or like, you know, navigation, like, you know, so, like financing these voyages across the world in the 18th century, like you had to have insurance. You don't have that really in crypto. So that's one area. The other one is really kind of new primitives that are coming up. You know, like tranching risk is really interesting for us. Like the ability to tokenize risk of, and create sort of structured products is another area. But
do you have investments in that area?
Yeah, so we led the seed round of Barnbridge, which is one of the latest protocols to come out. They're effectively trying to do this, right? Tokenizing risk and tranching different levels of risk of a particular instrument or a particular asset. So that's quite exciting for us. Again, it goes back to, you have perfectly auditable, transparent collateral, and then you're able to do really interesting primitives like understand the collateralization ratio of a particular protocol, and that has a certain level of risk, and you're able to like create a derivative that bets against that and has a different payout structure. You have a senior tranche and junior tranche, so you know that's exciting. The other area that we're just focusing a lot these days is building these bridges between traditional finance and DeFi. We take the view that that is going to happen. We see from our conversation, from our vantage point, a lot of interest from, you know, traditional market makers or financial institutions that are looking to get into DeFi. And why? Because, like, you know, DeFi finance is very interesting because, you know, we talked to a lot of people say, well, DeFi is really just an experiment and it's never really going to work. But our response to that is, well, you know, in finance, you don't really need to convince anyone. Unlike, you know, if you're selling software or whatever, you need to hop on the phone and convince people of decentralization and the vision. But really, like, if you're a trader and you can trade an asset on Uniswap or Curve or DUSD in a much more efficient way than what you can through Coinbase or Binance, then you're quickly going to move to DeFi, right? Simply because you can be more capital efficient, you can, your ROI is higher. And so that's in the state of the world that we are now, where traditional traders are looking at DeFi and saying, hey, I can be more capital efficient, I can make more money. How do I interact, right? And so they're not as sophisticated. So you need to have a good bridge for them to enter DeFi and interact with DeFi. So, you know, just like today, for instance, Dharma announced that their users can buy and swap tokens directly from Uniswap. And so you have a quasi-centralized kind of solution that is abstracting away all kind of complexity of interacting with DeFi, but leveraging and tapping into DeFi protocols. So that is kind of, I think, an area that if this space, like, how do we get from not only like 10 billion of total value locked, but 100 billion or a trillion, then you really need kind of that next evolution of bringing in traditional sources of capital into the space. Lou, I think you're on mute, but I've rambled enough by now.
Okay, there we go. Thanks. So thanks for that, Santiago. And now let's see if we can go. We're having a little bit of technical difficulty here, but I think we should be able to still have some questions from the audience. And I think we've got a question from Lori. So Lori, you should be able to turn on your video now and ask a question.
Okay, can you hear me? I don't think you can see me.
Yes, we can hear you and see you.
Oh, you can see me?
Yeah.
Thank you. My question is, of the stable coins now, DAI, USDC, Tether, where do you see the growth?
Yeah, so that's interesting. Yeah, so Santiago, you were talking about, the centralized and, now DAI, is part centralized, is a hybrid, as you say. So be interested to hear from all you guys, where you see the growth now coming from, from stablecoins.
Yeah,
thanks, Laurie.
Maybe I'll kick it off, and then Arpit and Sid, please jump in. But what we've been seeing is, something like USDC, the growth in USDC has been explosive this year, really driven by non-crypto businesses. So there's been an over 600% increase in the number of businesses that are now transacting with USDC. And historically, these are non-crypto businesses. So this is like a Walmart or a Starbucks that is opened up an account to like traffic in USDC, right? Which is backed dollar for dollar in a bank account. And you can always redeem USDC back to that dollar. And so I think one of the catalysts really this year has been COVID, right? In a scenario where you can't really go to the bank or you need to transact money and people can't really use traditional brick and mortar solutions, and you sort of resort to, okay, well, what is the alternative? And I think in moments of crisis, people tend to kind of open up and consider other possibilities. So it's been quite exciting to see that interest from non-crypto businesses. We see that, PayPal, for instance, obviously now is supporting crypto purchases of a range of assets. And as part of the partnership, if you read the announcement, it was they partnered with Paxos, which is another flavor of a stablecoin, which is very similar to USDC. So I think that's where a lot of the growth is coming from, like new entry of capital into the system and increasing the demand for stablecoins.
Thank you.
Cool. Sid, anything to add to that, or Arpit?
Yeah, I think stablecoins generally are great on ramps, right? So I've been talking to some of my friends who are, invest pretty heavily in traditional finance, and I've been trying to onboard them to crypto. And it's very interesting, right? At least, if you did not have stablecoins, it becomes a cognitive load to explain what ETH is, right? That is the case. However, with stablecoins, I think that barrier is reduced. At least, there's always that analogy in their mind that this stablecoin is a dollar. Even though, right, I'm not able to answer to them why there are 5 stablecoins on Binance itself. But but even with it, right, it's definitely a great on-ramp. So if we need TVL in DeFi to increase, we need to get mainstream money. And stablecoins are definitely driving that growth, sort of like an on-ramp.
Yeah, another,
which is also what Santiago said.
Yeah. Here's another data point, Lou. Historically, in countries where you have, a debasing currency and like rampant inflation, like in Argentina or Venezuela or, Turkey or pretty much a lot of the developing world suffers from this problem, right? Where a lot of people are looking to swap in, and you have these sort of like shadow markets of dollars. Historically, one indicator has been, for instance, in Argentina, where the Argentinian peso continues to, it's in hyperinflation mode. Historically, people have traded to Bitcoin as a safe haven because there's really no better option, and you're willing to, the Argentinian peso is more volatile than Bitcoin, right? And so Bitcoin trades at a premium in Argentina. But now what people are really just doing is, instead of going to Bitcoin, they are trading DAI or USDC. And the premium of USDC in Argentinian markets is much, much higher than in what you see and quote in, it trades above. And so that is obviously another catalyst where certainly in this macro environment, like a lot of currencies year to date have really devalued. And so a lot of demand comes from Turkey and Argentina and a number of the developing world that, is looking to place their assets in a safe haven.
Makes tons of sense. Okay, thanks for that question, Laurie. And let's see, still having a little bit of difficulty. We've got a question from Ganesh. Ganesh, are you able to unmute? And you can also turn your camera on. Welcome, Ganesh.
Thanks, Lou. So I'm Ganesh. I'm a researcher in stablecoins. So Santiago's point about the use of stablecoins as a way to hedge emerging market currencies. I find that interesting. So when you look at these rates that they're giving for USDC dollar in Argentina, I was just curious as a researcher where you get access to those, that data. And earlier on, you were talking about DeFi, and I wanted to ask, sort of thinking about the growth of DAI, whether DAI, a lot of DAI's growth in the last year has been due to DeFi and its use in compound. And why do you think DAI is such an attractive stable coin for DeFi? And in general, when you look at compound and these services offering interest rates, what are your general thoughts on this movement?
Yeah, so I guess a lot to unpack there, but I'll start. So a lot of data points are anecdotal from people in Argentina, for instance, that are trafficking in these markets.
Hey, Santiago, can you turn on your camera?
Sure. Actually, I cannot do it.
Okay. Here, I'll make you host. I'm sorry. Yeah, I'm not quite sure what's going on with Zoom, but there you go.
Okay. Yeah. Can you see me now?
Yes.
Okay. Yeah. So in emerging markets, we talk to a lot of projects that are on the ground, and so we get data points from them. If you ping me, I can share those directly with you. And so that's one. I guess the second point around like the usability of DAI and why that continues to be sort of one of the perhaps primary stable coins in DeFi is it's been around longer. There is a lot of like Lindy effect in using something that has been around and resilient. So Maker obviously is one of the like earliest DeFi protocols in Ethereum, and DAI is initially the premise of DAI is interesting, where it just is backed by a fully decentralized collateral, which is censorship, seizure resistant. Initially, it was all backed by ETH, and now, of course, it encompasses, I think, over 40% of the collateral backing DAI is centralized in some way, shape, or form. And so, I think a lot of critics of DAI point to that as an example of, hey, you really want perhaps truly seizure resistant decentralized collateral. But for us, look, we have a vehicle where we traffic a lot in stablecoins and are capturing the arbitrage opportunities when pegs deviate. And DAI is, sometimes DAI just is, if you're Aave or you're Compound or some of these protocols, money markets, you're going to support all stablecoins. There's really no rationale for not supporting, stablecoins, right? And it's just a marketplace, and essentially all of them should reference a unit of account like a dollar, and so you're gonna, use that. So DAI is, I mean, the real juggernauts are Tether, obviously, and that continues to be the primary stablecoin in DeFi, and then you have like USDC, and from there it just kind of really drops down in terms of the percentage of the supply that is encompassed by the other kind of tail end of stablecoins.
Cool. Thanks. And I don't know if there's anything to add to that, Sid or Arpit?
No, I'm good.
Okay. Okay, terrific. Let me ask another question. So now, can you talk about where we are, where you guys, think we are in terms of providing yield for stablecoins and how you see that evolving over time?
Yeah, so right now where we are is with the yield farming stuff, right? I think that has really become a rage. Simply, and let me just throw more light on that, what that is. So when you put money in a particular protocol, they airdrop you the governance token, right? So a lot of the ecosystem has, moved towards farming that yield. That's where
and Arpit, you should be able to turn on your camera.
Yep. So yeah, that's where we are. like in terms of yield farming. And also, I think a lot of the community has lost a long-term focus from, like building DeFi products just because of this yield farming craze. But definitely, when this subsides, if it does, people are going to come back to their senses. And what I've seen historically is like people building a lot in bear markets. Maybe that is something that we need right now. But yeah, in terms of yields, I think in the future, like I don't have that perspective as yet, but I think where a lot of value could come from is new financial instruments coming onto the Ethereum blockchain, right? So slowly, so all of this DeFi is about money Legos, right? So we have AMMs right now, options are slowly coming up with all of these financial instruments coming onto the blockchain. It's just a matter of time, right? Where people figure out new things that can be built and generate yield in innovative ways. And obviously yield will just be a side effect of use cases. So when there are use cases and people are using stablecoins to transact, right? That alone would be enough to build new use cases that generate yield. Yeah, that is my view. But I don't have any specific answer, right? A particular future that I see where stablecoin yield market would go.
As you look out and think about your growth, where do you see the growth coming from for DefiDollar?
Right. So one thing is, as I spoke about earlier, right, the fact that we can do a lot of integrations with other stablecoins. So we could explore a lot of cross-chain stuff. Like I think the stablecoin market is getting more and more siloed. There are stablecoins on different blockchains, and a lot of them eventually end up building bridges with Ethereum, right? We could actually help those stablecoins which are there on the other blockchains and have some kind of adoption to get onto Ethereum, right? We could actually support their wrap token, if that makes sense. Yep, that is one way. That is
what stablecoin or stablecoins do you see getting traction on other blockchains?
We have exactly.
Yes.
Terra is quite interesting. You have, no comment, but you have a lot of Tether on Tron, for instance. So I think ultimately, if you believe in like sort of multi-chain world, then I think each and one of these chains like Polkadot and Cosmos has Kava. Polkadot will have its own native stablecoin built by Akala. So I think, whenever there's value of a volatile asset, there's going to be a need for stable collateral around that. So, what's interesting about DefiDollar, at least how I see it, is it becomes sort of like a basket of, from a governance standpoint, like being able to decide the parameters by which the ratios of this underlying stablecoins that are being held by this meta coin that provides more stability. I think it's quite interesting. If you're a user, really removing the cognitive load of deciding whether to use USDC or DAI or Tether or GUSD or TUSD, like, you can envision like stablecoin growth will continue and there's going to be different flavors of these. And so like, from a consumer standpoint, it actually provides a ton of value. Just, you'd rather be diversified and well protected. Back to your points on yields, like, look, DeFi, anyone that tells you DeFi doesn't carry risk is kidding themselves, right? And so for the foreseeable future, there will always be a risk premium attached to interacting in crypto. So that is where the yield comes from, right? You need to offer a yield to compensate for the high risk of interacting with smart contracts and, just a blockchain, full stop.
And Santiago, you mentioned about the different flavors of stablecoins. Can you talk about kind of how you think about kind of the different flavors that you're seeing now, and what kind of flavors you think we might be seeing in the future? And if you could turn your camera on, that would be great.
Yeah. So I think you need to re-enable my video.
Okay, you should be now enabled.
Says
Nope.
I can't. Oh, one
Nothing.
second. No,
Nope.
no, 1 second. There we go. Yeah, so again, like on one end of the spectrum is fully collateral backed one by one, right? Where you have a dollar sitting in a bank account that backs that USDC. So backs that like digital dollar, if you will. So that it encompasses USDC, GUSD, Paxos, and a few others. But those are primarily the ones where it's kind of the safest stable coin where it's backed in a vault in a bank account, right? There is some counterparty risk of that bank blowing up or FDIC insurance around those deposits or the government seizing those assets. So those are perhaps the concerns that some people in this world have. Then on the other end of the spectrum, you have a stable coin that is not backed by any collateral. It simply works like fiat, which is you have kind of mechanisms that guarantee a peg, right? Because just, I guess for everyone's edification, like it's a good reminder, a stablecoin just references a unit, like another asset, and maintains relative value, whether it be pegged to the dollar or just relatively just in and around that range, right? And so in another scenario, you have something like empty set dollar or basis, if you remember back in the day, try to do this, where just you effectively create like a monetary system where you have supply and demand and market forces that are determining that peg.
So that would be, I think like the biggest coin I think of in that is Ampleforth.
Correct. Yes, exactly.
Okay.
Ampleforth, empty set dollar, YAM. It's like a number of flavors. They're called like seigniorage models, where you just are moving interest rates to influence supply and demand to maintain the peg. It's obviously riskier. There's a lot of vectors that could spiral out of control, and you have the peg completely fall off the cliff. Like that's possible. It's all based on some sort of trust and underlying demand for that stable coin. And then you have hybrids in the middle that are perhaps not backed fully one-to-one for that collateral. So perhaps you can include Tether in that range if you believe some sort of percentage of their assets it's not fully backed one by one. So those are kind of I just sort of encompass the two tail ends of those spectrums of stable coins. And then there's a lot of kind of different like hybrids of those along that continuum.
Okay, thanks, Santiago. Arpit, Sid, anything to add to that kind of flavored discussion?
Not much, yeah. So simply because there are so many stablecoins, there's definitely some amount of aggregation opportunity just by like removing the cognitive load for the user. And also in terms of yield, one thing that DefiDollar can do is, right, I spoke about cross-chain stablecoins, but there's also this fact that we integrate with yield generating protocols like the Y Vault, right? So if there's a protocol that is generating yield on another blockchain, something like Kava and stuff, right? We could always look at tapping into that, but obviously that's a little bit later in our roadmap when we have that insurance layer, when we have the right governance incentives aligned, and people can actually discuss what they want. But yeah, like our protocol is flexible that way.
Okay. So we always finish Stablecoins Are Killing It with two questions. The first question is, and it'd be great to hear from all the speakers on this, is what do you think we'll be talking about if we were on the show in a year in terms of stablecoins that we're not talking about today? And Arpit, you want to start?
I think Santiago can start. Let me gather my thoughts.
Sure. I think two things that are perhaps not as talked about. Libra, in my opinion, is going to be pretty explosive. When you have something that out of the gate you're introducing to 2.3 billion users from across the Facebook suite of products, from Facebook Messenger to WhatsApp, I think that's going to be, something that is going to be perhaps front and center next year. And so like I think that's going to be interesting. The different, how they go about it, if it's just dollar based or if it's local currency stablecoin back. So I think that's going to be pretty interesting. And the other one, which I don't necessarily dismiss as perhaps other people, but it's central bank digital currencies. You have an experiment going on in Shenzhen in China, where they're literally just airdropped a bunch of yuan denominated stablecoins. And I think Asia for a long time has been a window into where finance is going. I think they've completely leapfrogged the entire infrastructure of how you think about banking and finance. I mean, everything happens natively in WeChat. Like, there's no concept of like a bank out there. It's just digital money. And so I think the Asian population, like certainly in China or Korea or Japan, like just people are just more conditioned and familiar with like digital value and everything happening very natively and seamlessly. And so I think there's no surprise. I mean, there's over 18, 20 like world banks that are central banks that are exploring their own version of like a central bank digital coin. I think it's ultimately net positive when you have something like that, where, there's a reason why central banks want to do it. But I think ultimately, the consumer, it just opens up the interest from a wider population around, hey, what is this digital dollar? First of all, and just getting over that hump and then saying, okay, what else can I do? Now that you have a digital stablecoin like Libra or central bank digital currency or USDC or Tether, as Arpit or Sid were saying, then it is an on-ramp to then think about what else can I do with a stablecoin? Capture yield, I can lend it, I can invest it. And so I think that ultimately is quite exciting, just to move just crypto altogether forward, right? Because right now we tend to think that crypto is still a drop in the bucket, and we're still so early.
Cool, nice thoughts. Sid, Arpit?
I think with CBDC, yeah.
Go ahead.
With CBDCs, right? I think that is something that people have kind of overlooked for a long time, right? But it's just taking hold of people's imagination right now. You keep hearing things about JPMC coin and just stuff like that, right? I think Santiago even mentioned the experiments in China. We've heard of some things on those lines in India as well. So I think the whole point is about distribution, right? Right now, all of the usual people who are like in traditional finance, right? They don't really understand.
Hey, Sid, I'm sorry. Turn your camera on, please.
Yeah. No, I can't seem to do it. I think so.
Okay.
I'll just continue, right? So no worries there.
Yeah.
So the whole point is, I think, with that kind of distribution being tapped in, right? The kind of distribution that the central banks have, I think it'll be opening the floodgates, right? Not just for adoption of cryptocurrencies in general, but also for entrepreneurs, right? Because it kind of removes that extra layer of friction for transacting across borders, right? So that is something that we've not talked about a lot, and that, just like how yield farming became suddenly the craze in 2020, I think next time we jump on, there has to be something related to major development, right? Probably right now we have Libra as the only major contender there, but I think more and more of these institutions and like you can probably say GAFA, there will be another major contender being launched, right? If Libra probably becomes a serious contender for the stablecoin adoption worldwide. So yeah, I think that is something for sure that probably depends on the kind of timeline that we have before the next show, but really, really huge.
Okay, cool. And then the last question is, if somebody wants to get involved with DefiDollar, what do you suggest that they do?
I think it's pretty simple. For the next one day, they should definitely take out time to understand what's happening with the liquidity mining program that we have, right? Starting with the ILMO, which is the initial liquidity mining offering, right? That actually helps us distribute 3% of the network's value, right? To people who are willing to come in, try out the application and place a claim on these tokens, right? So that's a great place to start. And
where
apart from that,
do you suggest they go to educate themselves?
I think our Medium blog is the best place for that, because we've written in-depth guides and our thesis on why that is a good mechanism for distributing initial liquidity for a protocol, right? It's just that we just wanted a way where it's fair for new people who are coming in, right? And no one has a disadvantage in terms of coming in late or discovering the protocol, which is already being farmed for 6 hours and has like $100 million TVL already logged, right? So we wanted to prevent that. At the same point, we wanted to ensure we don't have a lot of mercenary capital coming in, and basically kind of incentivizing by making the process a little bit harder. When I say harder, it's not that hard, because once you put in time to understand and ask questions to the team and to the community on Discord, it becomes really clear what the value proposition is. But yeah, what we wanted with the 4-day contribution period was to ensure that people have time to react. No one needs to ape in, and it's sort of a more equitable distribution mechanism, right? So just trying to read more about this and DefiDollar in general, and going over to our docs and just trying out our application. I think all of that you will find in the Medium blogs with links at the bottom of the article. So that would be definitely a great place to start. And anytime, in case anyone has any questions, anyone listening to the show, just drop into our Discord general channel and you can pick up brains on anything related to stablecoins or DefiDollar.
Okay, terrific. So thanks for that. And Santiago, how should people reach out to you if they've got a DeFi idea that they want to share or contact you for other reasons?
Yeah, I'm on Twitter, so that's really where I live. And if you ever want to interact, just drop me a DM or just tweet at me, and we can, yeah, I'd love to hear any ideas or feedback or yeah, I'm at Santiago Roel. I can send you the handle, but you can find me there, and we can get in touch. Okay, great. Thanks, Santiago. Thanks, Sid. Thanks, Arpit, for a great show. Thanks everybody who dialed in today, and join us for Stablecoins Are Killing It, episode number 21 on this Thursday at 1 p.m. Eastern time. And we're going to have a show focused on the intersection of stablecoins and NFTs. So it should be an interesting show. Thanks, everyone.
Thanks a lot.
Thanks everyone.
Yeah.